So, I'm originally from upstate New York, a small town about halfway between Syracuse and Albany. Not many people have heard of it.
Yep.
So I went to Syracuse University where I got my bachelor's in accounting and finance, double major. And then when I moved out here, I went to San Diego State for my master's degree. It was the MSA with a tax track. I'm a California licensed CPA a couple years after graduating from San Diego State, and I began my career in public accounting with J.H. Cohn, they just merged with another firm. They're Cohn Resnick now. So when I was with them, they were a mid-tier company, which was great because we dealt with all sizes of clients and all types of entities. It was a great learning experience. We dealt with individuals, whether they just had a lot of investments, maybe they actually had rentals or a sole proprietorship, partnerships, LLCs, S corps, C corps, nonprofits, estates and trusts. You name it, we did it. So it was a really good learning experience, and then from there I rolled into one of the largest corporations in San Diego, CareFusion Corporation. That's how I know Gene here. For those of you who don't know, they're a medical device producer, manufacturer, distributor, sales. We make a lot of infusion pumps and medical dispensing units. So I started out in their compliance group, which dealt with the federal and state and local tax returns. Which, if you're not aware, there's a lot of states, especially in the Midwest and Northeast, that every city in the state, like in Ohio and then Kentucky, every city has their own income tax. So there's, for one entity, we're filing 300 tax returns a year. So anyways, from there I went on to the provision group, which is more dealing with SEC filing and calculating the tax-related items for their balance sheet and income statement. So from there, I took all these skills and knowledge that I've acquired over my time working for other people, and decided to open my own tax preparation service. So now that I can focus on individuals or small businesses and nonprofit organizations. I think it's very beneficial for a client to have a one-stop shop for his or her business and personal taxes, because that way, as their CPA, I can see both sides of any transaction or business deal and help them make better, more informed decisions on how to minimize their tax liabilities and keep their filings current and correct. Also, not only just tax planning, but it also helps with efficiency, because if I'm preparing someone's business return, then I have all that information for me, and I can roll it right into their individual return, not having to sit around waiting for information from another CPA, which can be difficult sometimes. And also, if clients choose, they can take me for bookkeeping services as well, which is just, again, another...
That was my next question.
Yeah.
Okay.
It's just another added level of keeping everything streamlined and all in-house, one-stop shop.
Bookkeeping too.
Mm-hmm.
Okay.
It just makes things easier for me. I get a little OCD about accounting and debits and credits and things like that, so I love to keep a balance sheet that balances right to zero with no rounding errors and things like that. So it's a smaller margin business, but at the same time it's fun. So with that in mind, I'm going to go over some overlooked tax breaks and for individuals, and just some misconceptions that small business owners may have. I'd like to start out with a little quote from Albert Einstein. He said, which is great that it came from him, "The hardest thing to understand in the world is the income tax."
Yeah.
Wow, that's a great one.
Yeah, especially coming from him. So I just, one of the biggest hurdles for individuals and businesses alike is keeping your taxes in order. With the ever-growing complexity of the Internal Revenue Code, and then there's always these temporary patches that become permanent, may become unpermanent, and all these changes every year with tax legislation, and roll that on top of how states decide to interpret the federal laws and how they decide if they want to pick and choose which rules they'll agree to, and etc. That's why it's smart to it's a smart decision to consult your tax advisor whenever you're making a major, considering a major business or financial decision. Like I always say, nearly all of life's major events has tax implications, and good tax planning happens before the fact, not after. So from there, we'll go into some tax breaks for individuals that individuals tend to overlook, and some misconceptions of small business taxation. So to start out, state sales and income taxes. I'm not sure how many of you are aware, but if you have a big ticket item that you purchased and you bought a car or a boat, something that's going to have a lot of sales tax on that purchase, you can, rather than deducting your state income taxes, which were maybe withheld on your W-2 or you paid estimated taxes throughout the year, you can take whichever one is higher. This benefit was actually taken away and now it's been reinstated, so again, it's the same thing with pretty much all the rules where they decide to keep it or decide to get rid of it and then bring it back, etc. But so again, if you have any major purchases for the year, it's just a good thing to mention to your CPA and let them know, hey, compare this to my normal state income tax deduction. Possibly get a benefit there. The child independent care tax credit. And a lot of parents realize, there's a tax credit for daycare when their children are young, but they might not realize that once the child starts school, the same credit can be used for before and after school care and day camps during school vacations. The credit can also be taken by anyone who pays a home health aid for the care of their spouse and/or dependent, such as an elderly parent who is physically or mentally unable to care for him or herself. The credit is worth up to $1,050, which is 35% of maximum $3,000 of eligible expenses per dependent.
What about babysitting for a specific work need? It's not aftercare, but I do have quite a few child care receipts that are just babysitting.
Yeah, just from what you're telling me, it sounds like it's likely. I'd have to discuss more of the facts and everything, but yeah.
On camera, don't guarantee.
Job search expenses. Whether you're currently employed or not, job search expenses are fully deductible as long as you're looking for a position within your own profession. You can't be looking to change careers. And it's for fees paid to join professional organizations and employment placement agencies, travel expenses for interviews, assuming they're not reimbursed by your current employer, as well as costs associated with resumes and portfolios. You go buy the expensive, nice-looking paper for your resume, or you get a nice binder. Those are all deductible expenses. And then all of these expenses are considered miscellaneous itemized deductions. So if you itemize your deductions on Schedule A, it's at the bottom of the list, and they're subject to what they call a 2% haircut. So if you say you have $100,000 of gross income, then you have to take the first $2,000 of your miscellaneous expenses are not deductible. Anything over that, then you can deduct. It's just another way of them haircutting or reducing expenses as deductions. Student loan interest paid by parents, and many of you are probably aware that you can deduct student loan interest that you paid yourself. But also, if it's paid as long as the child is not claimed as a dependent on the parent's return, they can claim up to, the child can claim up to $2,500 and student loan interest paid by the parent. You don't need to itemize. This is actually an adjustment to income. It's not an itemized deduction. So even if if you're a W-2 employee, you don't have a home where you have itemized deductions, you can still benefit from this, assuming you're under what they call the AGI limits. And also, medical expenses. In general, if you itemize your deductions, medical expenses exceeding 10% of your adjusted gross income can be deducted, which maybe many of you are aware of that general rule, but there's also things that are considered medical expenses that you might not be aware of, such as 24 cents per mile for mileage driven to and from doctor's appointments, similar to the business mileage rule, or if your business
What is
mileage,
that this year? For 2013?
56, I think, 56.5.
For deduction
What's that?
per mile?
Yeah, 56.5 cents per mile.
56 cents?
Well, it
Really?
used to be
11.
32, so it's pretty.
Yeah, it's
come
been
up.
climbing about a
2013?
penny a year for a couple of years.
So for 2013, business mileage deduction is at 55 cents.
Yeah, 56, I think. And then, of course, if
1 minute one.
oh wow, okay. All right, then then we will save small business taxation for next time.
No.
And just
Oh, I was gonna say, do we have time?
Well, 1 minute, I gave him 1 minute
Oh,
warning.
okay.
so just on that point, if you decide to take standard mileage deduction for business, that's in lieu of taking actual expenses, which it's you got to weigh your options to see what's easier, or what's more beneficial, but it's much easier to just say, to keep track of your mileage and then just apply the standard rate. So with that, I'll throw out a couple of specific lead requests. Any small business owners, nonprofit organizations, anyone looking to start a small business or nonprofit, or individuals with investments and rental properties, etc. I'm sorry.
Phone number?
All right, and if you have any questions, you can reach me at 619-985-5727, or you can, for more information, you can visit my website, maxwelltax.com, or follow me on Facebook. And any questions?
I have a